Okay, good morning, everyone, and thanks for making it a day with us on this webinar. Okay, so my name is Chooks, and I'm the country director for IBF Markets. So today we are going to be discussing something that is very important. Okay, a majorly overlooked topic in the FX markets. Okay, so I know most of you are already on mute. Okay, so basically, if you have any during the course of the webinar, if you have any comments to make, please don't hesitate to make use of the chat option. Okay, cool. So from time to time, I'll be asking you guys questions. So I know you might not be able to say anything, but just go ahead and give your reaction. Okay. Okay, so today we are going to be talking about the most common mistakes that traders make, the most common trading mistakes. Now, it's very important we actually discuss these things because once you know a challenge that you have, then you are just on your way to solving that problem. Okay. So first things first. Now, what I've done in my slides is to break it down into the two major categories of traders that we have. That is the new trader and the experienced traders. Now, it would have been just clumsy if I just went ahead to speak about challenges or common mistakes that traders have without separating the two, like talking about the common mistakes that new traders make and the common mistakes that experienced traders make. Now, for my slide here, you see once a new trader gets into the market, the truth is it has a perception of the foreign exchange market already. So he makes a mistake like just almost immediately. Okay, but for the experienced trader, even though he could have some little challenges, little mistakes, or little characters that is not in tune with the markets, okay, he might get away with it for some time, but over time, those things that you don't checkmate as a trader will actually come after you. It will come for you. You can't avoid it. Okay, so I move to the next slide. Okay, oh hi, I'm the newbie. Okay, so this is a newbie with his luggage coming into the FX industry. Now, probably he must have heard some stories on how he could become wealthy overnight. So he's carrying, for my slide there, you can see he's carrying all his life savings and coming into the FX industry. Okay, probably because he had heard some so-called professional who says, just in 5 minutes, understand how the foreign exchange market works. I'm sure some of us on this call might have actually had that experience before. Okay, so I'm starting out with a newbie. Okay, and then after I discuss or talk about the challenges or the mistakes that newbies that are common with newbie traders, then I'll move on to talk about the challenges, common challenges with professional traders. Now, look at this young man here. He's all suited up and ready for the markets. Okay, and then he has a laptop in front of him. But I ask you guys a question. What do you think this guy can actually do in the market? Now, the honest truth is this. Many of us come into the market, pick one material, learn from one so-called guru, and then we think, oh, we already understand the market. So we are just like this young chap here, all suited up, ready for the market, ready to take on the market. But guess what? Because he's a baby, he's looking into the system, he's confused. Okay, so basically, there are so many things that actually confuse us as a newbie trader. But then we think because we already read the material, we already have full graphs of the market. But guess what? In the industry, in trading the foreign exchange market or trading the financial markets, okay, it's a learning curve. There is a learning curve. You can't avoid it. You can't escape it. You can't avert it. Okay, it's just like saying you're a medical practitioner and then you read a manual, and after reading a manual, you want to perform an operation. I mean, come on, where does that happen? Okay, I'd like to ask you guys a question. You can drop your comments or your response, okay, via chat in the comment section below. Okay, and then imagine you are scheduled for an operation, and then you go into the theater and they tell you, oh, this doctor, he has years of experience in reading manuals, but he had never performed one operation. And they said, oh, he has read so many books. In fact, he read the full operational procedure just last week, and then he wants to practice on you. Now, the question I'm asking you guys is, would you submit yourself to that doctor to use you as a practice? I'm sure many of you, I'm sure the answer you would give to me is no, absolutely no. Okay, so it's the same thing with the financial markets. Okay, you read a manual in a week and then you jump into the markets all suited up thinking you want to take on the market. No, there is a learning curve. Okay, so it's very important that we emphasize and highlight these issues, else our stories will not be different from those who have had their fingers burnt in the past or have had bitter experiences. Okay, so we'll move on to the next slide. Okay, so these are the common newbie mistakes. So what I've done here is I've highlighted those mistakes, and at the same time, I've put just directly in front the potential solution or the possible solutions to these mistakes. Okay, now the first thing is this: you have an improper education. Okay, that's one major challenge that most newbie traders have. Okay, there are two things to it. The truth is, you want quality education, you need to be ready to pay for it. Okay, there's no free meal even in Freetown. Okay, so the truth is, you really want proper education, you really want a better understanding of the market, then you need to be willing to pay for it. So you need to get the right training. Okay, so most of the challenge that we have as a new trader is improper education. Now, I might not blame you. Okay, at times you think you've met a professional. Okay, so the professional makes you believe that, oh, in 5 minutes I can teach you everything you need to know about the foreign exchange market. So you already have a mindset of how the market works. Okay, and you feel, oh, with this mindset, I can actually take on the market. Well, the answer is absolutely no, it's not possible. Okay, so you need to get the right training. And congratulations to you for attending this webinar, because we're actually giving you an expose on the challenges that traders face, so that when you're armed with this information, you can't make the wrong decisions or the wrong the wrong decisions anymore. So you need to get the right training. And congratulations to you for attending this webinar, because at IBF, I can guarantee you with IBF markets that you are in the right place and you have the right training. For some of you that have gone through the training, you would testify that yes, we have one of the best trainers in the industry. Okay, so the second thing is the Holy Grail mentality. Many of us come to the FX industry or to the financial markets with a Holy Grail mentality. You feel, what do I mean by a Holy Grail mentality? You have this perception that you have the, what will I call it now? You have the ultimate solution, like in mathematics, the almighty formula, okay, to cracking the FX code. Now, let me shock you. Okay, there is nothing like the Holy Grail in the FX industry. There's no one shoe size fits all in the FX industry. Okay, there are many approaches to trading the markets. Yes, know what's best for you, what works best for you, know what works best for the assets that you are trading. Because one thing that you might not know is different assets have different trading methodology. For example, I have a strategy that works so well on the Forex market, but if I take that same strategy to the stock market, it will not work. If I have a strategy that works so well on the stock market and I take that same strategy, okay, to the cryptocurrency market, it would not work. Okay, in other words, in a nutshell, what I'm trying to say is each market has its own characteristics. Okay, and I cannot overemphasize the place for experience in trading. Okay, so you need to understand understand the characteristics of every asset class that you are trading, and this to a large extent will help you make the right trading decisions. Okay, so please, you need to develop the right mindset. That is the solution to the Holy Grail mentality. It doesn't exist in the FX industry. There's nothing cast in stone. Okay, you are trading based on probabilities. So you need to understand that for every decision you are taking, there is a probability of it as well failing. In other words, it's not 100% guaranteed that for every trade you take, it must hit your goal. Okay, so please, you need to understand that. Okay, the next thing is wrong information. Just like I was just saying some seconds earlier, or some few minutes ago, okay, that each asset class, okay, has its own characteristics. I remember when I started my career in the FX industry, okay, I got a book relating to the stock market, and I digested the book. I read everything back to back, and then I felt invincible. I felt, oh, I'd conquered the market. Okay, but by the time I got into the game proper and I started trading, I realized that many of the information that I had, okay, I could not apply them to the FX market. Why? Because I was reading a book that was developed for the stock market. Okay, so it's very important that you understand that you might just be open to the wrong information, and that's a challenge. Okay, because once you're exposed to the wrong information, automatically it forms a mindset for you. Okay, and the moment it forms a mindset for you, okay, you're working with that mindset. I don't know how well to explain it, okay, but you know, there are some people who are fixated. Once they are fixated on something, you can't change their mind. Okay, and that's a problem. Okay, you need to understand that information. What's the source of that information? Okay, the information I'm using, what's the source of the information, and what problem is that information trying to solve? Okay, so if I don't understand the problem, okay, that what I'm reading is trying to solve, I might think, oh, it was actually produced or created for something else. Okay, and because of this, I will make the wrong decisions. So it's very important you get to understand this. And like I said, okay, congratulations to you. At IBF Markets, we have one of the best trainers, okay, best training department, best training team. So you are covered. You need to get the right mentor. The right mentor who understands that, oh, this strategy is for the cryptocurrency market, this strategy is for the stock market, or that strategy is for foreign exchange market, or this strategy is for CFDs. Okay, so it's very, very important that you get to understand that. Okay, then the other thing is impatience. Impatience. Okay, you are trigger happy. Now you see the major challenge with some of this wrong information is, you see someone telling you, because he wants to cajole you, okay, into doing business with him. He wants to fool you. Okay, it makes you believe if you invest $500 in the FX market right now, okay, in a month's time, you could be counting $100,000. Okay, it doesn't exist. Now, I'm not saying it's not possible. It is possible, but the question is it sustainable? Okay, so from experience, we understand that that kind of trading is not sustainable. Okay, why is it not sustainable? In trading, you are taking up a risk. Okay, there's no 100% guaranteed situation. Okay, so what that means is you need to understand the risk involved, and you need to understand that because it's based on probability, it means there are times the strategy will fail. Okay, so you don't want to bet your entire farm on any single strategy. Okay, so what does that mean? It means because you've had the wrong information, okay, something excites you and you feel, oh, with this, my life savings, I can make times 100, times 1,000 in just 1 month. So because of that, you become impatient. You want to jump into the market. Okay, so the truth is, in trading, patience is a virtue. Okay, you need to develop the characteristics of patience. In other words, it's not every trading signal that I see that I jump into. Okay, it's like you're in a battlefront, in a war front. The best soldiers understand that at times they need to lose some battles in order to win the war. Am I making sense? It's a strategy for people who trade, who play chess. They will understand this. At times, you need to let go of some pawns. Why? Because you need to set traps for the queen or for the king. Okay. So, at times in your strategy, you need to lose some battles to win the war. Okay, so what does that mean? You need to learn patience. Yeah, you've learned how to trade, but guess what? It's not every trading signal that you put you take a risk on. At times you need to let go of some trades. Okay, the other thing is wrong position sizing. What do I mean by wrong position sizing? Okay, now I have X amount of money, assuming 100%. Okay, because they've told me that in a short while I can become a billionaire in dollars overnight. So I get all excited. And because of that, I bet my entire capital, my entire equity invested on one single trade. That's wrong position sizing. Okay, the best of the best traders advises that you must not at any time trade more than 2% or invest more than 2% of your equity. Why? It means if I'm putting 2% of my equity per trade, that means I need to take an average of 50 trades, okay, before I burn out my capital. I personally advise between 0.5% and 1%. Okay, why? Because it helps you stay longer in the market. One, it helps you have a better grasp of the market, a better understanding of the market. Okay, so you just realize that with the right information, okay, you can never lose out in trading. You would always be properly guided. Okay, so the solution to wrong position sizing is proper risk management. Okay, you need to understand that there is this popular quote, this popular saying that says, the more risk you take, the more the expected return or something. Okay. Now, in my career path, my boss once told me this. He said, it's not the more risk you take, the more the expected return. Rather, he says, the more risk you take, the more the returns. That, in fact, that's the right word. The more risk you take, the more the returns. It's not always the more the returns, it's always the more the expected return. In other words, that is your expectation, is not a guaranteed result. Okay, so you need to understand that if I'm taking up a risk, there is no 100% guarantee that it's coming back to me. No, it's just like in terms of probability. Okay, but then what we are looking for an 80 to 90% probability, okay, that this is the right decision. Am I making sense? So with this, you realize that you need to do proper risk management. Okay. On the other hand, okay, the next point is over trading. Number 6 point, over trading. Okay. Now, yeah, even for those that are trading as a career, I know of a very fantastic trader who doesn't take more than one trade per month. Okay. And over the years, he has done over 25,000% return of his investment. Okay, he doesn't take more than one trade per month. Okay, now the idea is this: you are in this for the long term. So because you are in this for the long term, it's not a marathon. Sorry, it's not a sprint, rather. Okay, it's a marathon. You want to take your time. You're not rushing. Okay, the idea is I have this investment, I keep it aside, and then over time, this is my goal. Okay, now when you have a good understanding of how to invest in the financial markets, you'll find that naturally some of these mistakes you're not going to make them. Okay, because well, one of the reasons why people overtrade is I get into a position, okay, I get stopped out. Something keeps telling me this thing is going to go down, it's going to go down. I jump in again. I get stopped out. It says it's going to go down, it's going to go down. I jump in again. Okay, the truth is the market has been around even before most of us were born. And the truth is, after we are long gone, the market is still going to be there. So the question is this: should I jump at every opportunity that comes? The answer is no. Okay, I need to patiently take my time, look for the best trading opportunity, and take advantage of it. Okay, it's just like a hunter who goes into the forest and then he has limited bullets. Okay, he won't go into the forest and start shooting sporadically. Okay, at this juncture, I'll quickly tell you guys a story. Okay, there was this veteran hunter who has been a hunter for years. And then, you know, according to their tradition, when their sons are of age, they need to take them hunting so that they can learn, you know, they can learn how to hunt. They can learn the skill of hunting. Okay, so this man took his son into the forest for the first time. And immediately they got into the forest, the son saw a lot of animals running around. No, son was like, "Dad, why don't you just shoot into the forest?" just shoot aimlessly into the forest. And then after we have exhausted our bullets, we can now go and pick the animals, that get caught in the crossfire. And the dad was like, son, it doesn't work that way. Okay, because by the time your bullets are exhausted, and then the big animals, because you have created, some noise, the big animals, the elephants, the lions come after you, what will you have left to defend yourself? Okay, so in trading, you need to understand that your resources are limited. So because your resources are limited, you need to wait for the big kill. You don't always have to jump at every trading opportunity. Wait for the big kill. Okay, once the big kill comes, you stalk the big kill. You patiently wait for the big kill. Okay, once it comes, you aim carefully at the big kill. Okay, and you take a big kill home. Okay, so that's the experience that you're bringing into the market. Now, with that, you realize that you don't overtrade, and rather you are focused on the task. Okay, the other thing is ability to control your emotions. Okay, so sorry, at this junction, I might sound a little bit religious, okay, but then it's just a theory, a principle that works for all. Okay, now somewhere in the Bible it says, where your heart is, there your treasure. Where your treasure is, there your heart will be also. Now, leave religion out of it. The truth is, when you treasure something so much, your heart will always be there. Okay, you always think of that thing all the time. Okay, so the same thing works for us. Yeah, when you have your money saved somewhere, peradventure now you have your money saved in First Bank, GT Bank, or Zenith Bank, and then you hear in news, I mean, all your life savings is in one of these banks, and then you hear in news on the TV that says, oh, the MD has disappeared with all your life savings. What happens? Or all the money in the bank. What happens? Immediately your heart starts to palpitate because your mind is telling you, wow, I've just lost all my savings, right? So that's how it is in the markets. I mean, you're putting your money on the line. So because your money is on the line, okay, every of your emotion is involved in what's happening on your trades, okay? So that's a challenge, because in trading, one of your greatest challenges, one of your greatest enemies, if I can use that word, is your emotions. Okay, you need to learn how to put your emotions in check, how to control your emotions, okay, so that you can trade emotionlessly. Now, the truth is this, it's almost 100% impossible not to have your emotions involved in trading, okay? And that's why we advise people to always involve position sizing. Okay, what that simply means is this: for every trade I'm taking, okay, my emotions is not attached to it. Why? Because there are two outcomes of every trade. Please, if you've not been told this, know it now. No matter how high the probability is, okay, there are always two possible outcomes. It's either it's a winning trade or it's a losing trade. Okay, now don't forget, we are looking for a high probability chance of winning a trade, 80% chance. But guess what? There's always a 20% chance that could be a losing trade, right? So what that simply means is this: if I'm putting my money on the line, okay, I need to be so sure that if I take a loss on this trade, it won't, make me uncomfortable. It won't unrattle me. It won't make me feel sad. Okay, so until you're able to manage your risk properly, it's almost impossible for you not to be able to manage your emotions in trading. Okay, so it's very important that we get to understand this. Okay, so potentially, what's the solution to this? You need to have a trading plan, and you need to be disciplined to follow through with your trading plan. Okay, for example, earlier on I said you should not invest more than 0% to 0.5%. 0% to 0.5%, sorry, 0.5% to 2% of your equity on any single trade. Okay, so the moment, okay, take for example, now I have $1,000 in my trading account, or $10,000 in my trading account. Okay, and then I want to take a trade. Okay, and I'm asking myself, okay, how much is 1% of $10,000? 1% of $10,000 is just $100. Okay, if I take 0.5% risk, that means I'm risking $50. Okay, so if I risk $50 on a trade and I'm targeting times 3, okay, that's $150 potential return. Okay, the truth is, if I lose $50, I still have $9,950 to still trade. Okay, so with this, I am more focused on the task okay, and I'm not afraid because I have a trading strategy that has an 80% winning rate. I don't know if I'm communicating with you guys. Okay, if I am, just, you know, drop an emoji telling fantastic. Okay, I love that. Well done. Okay, so the other challenge that you might face as a trader is what we call adding to losing trades, or the technical term is averaging down. Okay, now most times, most new traders, after some time, they start breaking their trading rules. Now, guess what? You must always, always, always learn to trade with a stop loss. Why? Because the stop loss is more like saying, I am risking X amount and I'm sticking with this risk on this trade. Okay, but at times, because we all know that the market is not stable, it moves up and down. And then after your analysis, something tells you at the back of your mind that, oh, this is a winning trade. Then something tells you take out your stop loss, and you take out your stop loss, and then it pushes way against you. The next thing you are doing, you add another position to it. It moves again, you add another position to it. And it keeps moving, you add another position to it. The truth is, it's actually not a good trading habit. Okay, so you need to learn to always know the risk you are taking per trade. Now, that means you need to be very calculative. You need to understand what you're doing so that you've done your risk analysis on every trade before you put it on. Okay, so the next thing we are talking about, okay, the solution to that is, the truth is, if you are doing that, you're actually gambling. I'm sorry, because you are hoping. Okay, you're no longer objective. You are now hoping that, oh, the market will turn around. So you keep hoping that it's going to turn around someday. I've seen that happen a lot in my my little time that I spent in this industry. You see people, fantastic traders, but because they cannot just stick with their trading rules, they get into trades and it just keeps moving against them, moving against them, moving against them. I've had my own share of experiences. I'm going to tell my story, but not now. Okay, so let's keep moving. Okay, the next thing, when you find out that, oh, I'm averaging down or I'm adding to my losing position and I keep losing, at some point, you might get frustrated and then you close out the whole trades. Then you move to what we call revenge trading. Revenge trading. Oh, the market has taken my money. I want to take it back. I don't know if you've been trading. At some point, you might have experienced this feeling. Okay, the market has taken my money. Let me take it back. So probably you took a trade and you lost $200. There's something, you see the market now moving down or moving up, you know, in a very fast way. Something now tells you, if only I can get my $200 back. And then you quickly pick, number one, you've broken your trading rules by increasing your lot size, or what we call, you're increasing your risk. And it's okay, let me quickly. And then you might be lucky, you might get your $200 back. Okay, but you see, what you've just done is that you have broken your trading rules and then you have moved to something else. Okay, you're no longer applying discipline to trading. Okay, so the next thing you are doing, you start trading what we call revenge trading. I mean, the market is not a human being; it's an inanimate object. Okay, but then you want to revenge. I mean, come on, you guys are not fighting. Why are you trying to revenge? Why are you trying to get your money back? That trade is gone. You move on to the next trade. Okay, you move on to the next trade. You move on to the next. Can I use what? Calculative trade, well planned out trade. Okay, so you're no longer trading spontaneously. You're no longer, you know, jumping at every trade that comes. Okay, so you need to understand that. Okay, understand that this trade I'm taking, if I'm taking a risk, if it works, fine. If it doesn't work, fine. Okay, cool. So the last thing that I'm going to be talking about is wrong brokers. Wrong brokers. Now, the honest truth is that there are a lot of wrong brokers out there. Okay, and that's one of the things that as a company we are trying to solve. IBF Markets is coming with a difference. We are traders. We are a company created by traders for traders. Okay, so congratulations to you. You have made the right decision by joining IBF Markets, because IBF Markets is the right broker for the season, if I can use that word. Okay, so basically these are the common mistakes that new traders make. Now, the truth is this. One of the ways by which you could actually find out about brokers, okay, is to do an online review. online review, a third-party online review. I'm emphasizing on the word third-party. Okay, for example, you want to buy a car. Okay, you want to go online and find out what other people that have used that car, what are they saying about that car? Please, point of emphasis, other people that have used that car. Now, the truth is there are some people who come online who have not made use of a particular product, okay? At times, these guys are actually paid by competitors to rubbish or to spoil the reputation of another brand. But the truth is, these guys have not actually used that brand. They just go online and they try to paint a bad image so that they could put a review, a wrong review about a competitor online. Okay, so that's why I'm emphasizing on third-party review of people, consumers that have really used the product. It could help you out, not just in the investment cycles now. Okay, you could just go online, whatever you want to buy. If it's a car you want to buy, if it's a product you want to buy, a cream you want to buy, whatever it is. Okay, go online, do a third-party review. Okay, it could help you out, okay, to make a right decision. Okay, it's very important because there are brokers out there that try to manipulate clients into losing their funds so that they can earn off these clients. Okay, we call them B-book brokers. Now, guess what? Not all B-book brokers are bad, but what B-book brokers do is they put themselves in a position where they could get tempted, okay, to manipulate people's trades. Now, I'm not saying all of them are wrong, okay? It's just that we've had stories where brokers actually trade against clients, causing them to lose their funds, or manipulate the market conditions, causing them to lose their funds. Okay, so it's very important that while you are trading, okay, you actually trade with the right brokerage company. Okay, and that's why I'm recommending IBF markets any day, anytime. Okay, so that's that about new traders. Okay, we'll move on to the next slide. For those that are experienced, they are not left out. Okay, this in this session, okay, I'm going to be giving you a little story about myself, some of the mistakes I've also made as a trader in the past. Okay, these are common expert trader mistakes. Okay, I've listed them out. Okay, and just directly in front, I also come with the potential solutions, okay, to these challenges. Now, number one, physical and mental preparedness. Now, the truth is this: trading is a serious business. That's why I laugh when people say, in 5 days, I can teach you how to make money from the Forex market. It doesn't work that way. In 5 days, I can teach you how to make money from the financial markets. It doesn't work that way. Okay, some of you are professionals, and I'm sure in 5 days you didn't turn out to be a professional. Some of you are professional doctors, professional lawyers, professional engineers, professional building contractors, even professional artisans. I'm sure you didn't. If you're an artisan, I'm sure you didn't become a professional in 5 days. So how do you think you can be a professional trader in just 5 days? It doesn't work that way, please. It doesn't exist. Okay, so you need to treat trading as a serious business. Okay, so first things first, physical and mental preparedness. Just as you take your time, take a shower, and you go to the office. Okay, that's exactly the same kind of vigor that you're bringing into trading. Okay, you need to be prepared both physically and mentally. It's not something you just sit down and then you just do off. I mean, come on. When you want to watch a movie, you just relax on your bed and you play the movie. It doesn't work that way. No, it doesn't. Okay, it is a serious business. You need to be in the right frame of mind to actually trade successfully. Else you take the wrong trading decisions. Okay, so you need to treat it as a business. That's number one solution. Okay, now trading without a plan. As a professional trader, okay, you need to have a plan. Now let me give you an analogy here. For example, if pilot understands that he has a flight plan. For anybody who is a pilot, you understand what I'm saying. He has a flight plan. Okay, the pilot doesn't just go into the cockpit, starts the plane, and then just decides to fly to God knows where. No, he does a thorough check on his dashboard to make sure that everything is functioning properly. Okay, he checks the weather condition to make sure that it's favorable for flying, okay, before he takes on that flight. Am I making sense? So you don't trade without a plan. You don't trade spontaneously. You're not a spontaneous trader. You need to be disciplined and have a trading plan. Okay, someone is writing on our screen. I don't know who that is. Please just be careful as you're moving your devices. Okay. Then another challenge we have is we ignore the trends because you've not prepared physically, you've not prepared mentally. Okay, you just come into the chat, you put up your trading your trading device, you put up your platform, and then you just see something and say, oh, this looks like a hammer, or this looks like a reversal signal, and then you just dive at it. The truth is, what you've basically done is, number one, you've traded without a plan. Number two, you've ignored the trend. Now, in trading, there's something we call the trend is your friend. Now, what that simply means is every good swimmer, I'm not talking of people who swim in the pool now, I'm talking of people who swim in the river, or people who swim in the ocean where you have strong currents. They understand that the wise thing to do is not to swim against the tide, but to swim with the tide. Okay? So it's the same thing in trading. You don't ignore the trend. You trade alongside the trend. Okay, the trend is your friend. Okay, so you don't just come to the platform, open up your platform, and then you jump on it. No, you need to stay focused. Stay focused. Okay. Now, unfortunately, because somehow along the line you didn't have a trading plan, you ignored the trend, there is a strong possibility that you will trade without a stop loss. We have so many traders that trade without a stop loss. It is just too risky, because what you are doing is you're not just taking 2% max risk on your trade. What you have done is that you have exposed the full spectrum of your equity to the risk. Because if you trade without a stop loss, if there's an unusual volatile condition in the market, which rarely happens, but it does happen, it means you're going to wipe out your trading account. Okay, so it's very important you always learn to trade with a stop loss. Now, at this junction, I'm going to talk about my story. There was a time in a particular year that I had a very fantastic result. In fact, in that year, I'd done over 900% on my trading account, and I was, having this feel of invincibility. Okay, and I thought like, no, this is just super. Okay, I'm a superman. I understand the FX market like the back of my hands. Okay, and I got busy around that period. I had some other things, some other engagements. So I had not traded for I think about 3 weeks. Okay. But what I do, I have then I used to have people that follow me, okay, on WhatsApp on social media. Okay, so one of my students called me. I was like, oh, there's this analysis you did 3 weeks ago. I think prices around that zone. You might just want to look at it because you don't want to miss out on the trade. And then I looked at the trade and it looked so perfect. In fact, I've never seen any perfect trade set like that one in my years of trading up till now. Okay, and that trading setup looked so perfect. I mean, I had a confluence of technical tools all pointing to the fact that this thing was going to work. And truly, that trade would have worked. Now, I consider the fact that in 3 weeks I had not traded. And I saw this perfect trade setup. So my mind told me, wow, I mean, come on. I can make another extra 1,000% just with this trade. So what did I do? I took 50% of my capital and took it on that trade. Why? Because it looked 100% sure that this trade was going to work. Now, let me tell you something. The honest truth is that trade would have certainly worked. But guess what? Lo and behold, on that beautiful day, the Bank of Japan governor was making a speech. And I didn't know. Okay? And he said something that caused the Japanese yen to weaken. Guess what? From the place I took my sell trade, without a stop loss, the Japanese yen did over 1,000 pips in 1 week. If you understand what 1,000 pips means, then you understand what I mean. In 1 week, guess what? It almost wiped out my entire trading account. Okay? Since then, I realized I must always trade with a stop loss. Okay, because I did actually trade without a stop loss. Okay, so that's why I said even the expert traders, they are not left out. Okay, there are some some traits that we think we could just manage to keep and then not correct them. The truth is, at one point or the other in the market, it'll come for you. Okay, so you need to learn to be a disciplined trader. You need to learn to control all of these traits. Okay, take them off. Take them off. Okay, I hope you guys are following me, and I hope you're enjoying our conversation. If you are, can you just wave your hands? And if you can't wave your hands, just put up that emoji that waves your hands. Thank you. Thank you. Okay, so let's keep going. Okay, so very important you learn to trade with a stop loss. Okay, when you have risk management at the back of your mind, certainly you will always want to trade with a stop loss in place. Okay, the other hand, you need to learn to control your emotions. The truth is, even professional traders find it very difficult to control their emotions. And this happens most times when you are over risking, when you are putting much of your capital at risk. The truth is, if you're not putting too much of your capital at risk, okay, you will find it so easy to control your emotions. So the solution to this is proper risk management. Okay, proper risk management. Okay, now the next thing is over trading or trade management. Now, if at times some professional traders also over trade, it's so important you need to understand, like I said earlier on, I know of someone who takes only one trade per month. And over the years, I think in the last 4 years, he has done about 25,000% of his trading account. So you can imagine. Okay, so you don't want to over trade. So you need to learn what we call proper trade management. Even when you put on a trade, okay, you need to learn to manage your trades properly. Okay, in other words, learn to stick with your trading plan. If you stick with your trading plan, to a large extent, you are covered. Okay, averaging down, adding to losing trades, because you over trade, at times you add to losing trades, even as professional traders. Okay, so you share the same similarity with new traders. Okay, so the solution here is have a trading plan and be disciplined, and disciplined enough to stick with it. Have a trading plan and you need to learn to stick with your trading plan. Okay, the next thing we have is trading correlated pairs. Now, most professional traders don't realize that some pairs have a correlation. What do I mean by correlation? I mean, they are family, they are cousins, they are brothers. Okay, it's just like saying I'm trying to fight with somebody now, and then I fight with him, I fight with his brother, I fight with his sister. The truth is, the three of them will come after me and they will overpower me. Okay, so what that simply means is you need to understand that there are some pairs that, because they have a relationship, they tend to always move in the same direction. Okay, so because of this, you don't want to trade correlated pairs. For example, I want to have a little bit of risk on the Forex market. I want to have a little bit of risk on the indices market. I want to have a little bit of risk on the commodities market. I want to have a little bit of risk on crude oil. Okay, why? These are different asset classes. Okay, one of the things I don't want to be doing is I don't want to be trading I don't want to be trading I don't want to be trading the USD chef and at the same time trading the euro dollar, because somehow some of these guys are correlated. Okay, I don't want to be trading possibly I don't want to be trading the USD JPY, okay, and at the same time probably trading probably maybe the Japanese JPY. Okay, why? Because somehow these guys are correlated. Okay, so there are some pairs that are correlated. They move in the same direction, because what that simply means is if I'm taking 2% risk on a trade and I'm trading a correlated pair, I'm no longer taking a 2% risk, I'm taking a 4% risk now. I don't know if what I'm saying is making sense. Okay, if it's making sense, just do this. Okay, if it's not making sense, you can ask the question. Thank you. You can ask the question. Okay, we'll come back to it. So if you have any question, just let us know, okay, in the course of the class. But then it's very important that you see in trading. I'm sure you must have heard this phrase, as we grow, as as you are growing up, as we grew up as children. Don't put all your eggs in one basket. Okay, so what that simply means is diversification of risk. Okay, so you don't want to put all your investments in one basket. In other words, you don't want to put all your you don't want to take risk on things that move in the same direction in tandem. Okay, you want that are moving in different directions that are not correlated. Okay, because you know that you are spreading your risk. Is that okay? So the solution to this is understanding correlation. Understanding correlation. Okay. The other issue that most expert traders have is holding on to a bias. Okay. What do I mean by holding on to a bias? You do your analysis. Based on your analysis, you expect the market to sell off, right? That's your bias. I expect the market to sell off. Now, the market, instead of selling off, starts to buy. And you pick a trade, hoping that, oh, since my bias is for a sell-off, okay, I get into the trade. And you get stopped out. Then just at about when you get stopped out, it's like it gives you another signal for a sell. You jump at it again, okay? You get stopped out. The truth is this: you need to learn flexibility as a trader. You need to be sensitive enough to know when the market dynamics have changed. It's possible that you are right initially, okay, but then the underlying market forces might have changed. So instead of buying or instead of selling, the market have moved from a sell-off to a buy decision. Okay, so you need to learn flexibility so that you don't hold on to a bias, else you keep selling, even when all the pointers have changed from selling to buying. So in trading, please understand there's nothing cast in stone. Okay, you need to be flexible enough, okay, to change as the market dynamics are also changing. It's very, very, very important. Okay, and then one other challenge, which is the last challenge, okay, I have for this webinar that expert traders face, is also trading with the wrong brokers. Okay, at times some people focus so much on trading, they're very good at trading, but they ignore the fact that you could actually be trading with the wrong partner. Okay, as much as possible, as much as you are important in business, your partner is also very important in a business. Because if you are putting in your best to make sure the business works and your partner has an ulterior motive, trust me, your business would not fly. It will not work. Okay, so what that simply means is you want the right trading partner. Okay, and I'm going to re-emphasize on the fact that IBF is your right choice of a broker. Now, I'm not just saying this because I work with IBF markets, but I'm saying this because I understand the dynamics. I understand the dynamics of making a choice when it comes to trading with a broker. One, two, I am one of the stakeholders in this brokerage company, and I understand what we have been doing at the back end to make sure that all our traders are happy, all our traders are fulfilled, all our traders are successful. Okay, so that is why I'm vouching for IBF markets, and I suggest that you carry up this what I call it now, this message. Okay, take it out and get people to sign up with IBF markets, because trust me, it will be one of the best business decisions that they would have made. Okay, so in all of this, okay, in all the solutions that we have spoken about, we all need to learn the trader's mindset. You need to learn to develop the trader's mindset. There is a mindset for trading, okay, because trading is not cast in stone. It's we call it gray areas. Okay, it's not how will I put it now? It's not because A, I've seen A, then it must be B. Okay, trading is more or less an art. Okay, it's a skill that you develop. The best way I can explain this is driving. Okay, the best that you could do with driving, they could teach you how to move a car in a week, at most 2 weeks. But then you need to constantly drive, okay, so that you develop the skill of driving. Now, guess what? Your driving tutor would not tell you that when you see a trailer, facing you, like on the highway coming at you with high speed, that you should swerve off the road for him. Nobody will tell you that. Okay, but then as you drive, you understand that this is a dangerous situation. I need to protect myself. Okay, so as a trader, you need to learn to develop a trading mindset. Okay, there's so many things that you would have heard over the years that is not consistent with trading that you need to drop off, okay, so that you can pick the right trading mindset. Am I making sense, guys? So when you have the right mindset, you have new results. Now, there is this saying, you can't keep doing the same thing, okay, all the time and expect different results. No. If you've been trading and struggling, you need to change your mindset. Try and look through the mistakes that I highlighted above. Ask yourself, where do I fit in? And then look for the solution that is just directly in front of that challenge, and then pick up the solution and start working on it. Okay, now the truth is, once you have a new mindset, new results, the money just starts to flow in. Is anybody smiling there? Are you seeing the dollars flowing? I mean, the guy has developed a new mindset, as you can see, and just at the click of his fingers, the dollars are just falling on his laps. Is that not interesting? I'm sure that's what we all want. Okay, that's why we have all decided to come into the FX, financial markets, to make money. And trust me, you will make this money. You will make it. Okay, so the right way to think. Okay, so trading is like flying a plane. Your understanding of the best times to fly, that's the perfect flying conditions, will improve your winning probability a great deal. Okay, so it's so important that we understand that as a pilot flies a plane, he understands the best times to fly. The same thing, okay, in the same vein, I always ask a very formidable question, a very vital question. And the question is this, which I want us to actually ruminate over and think over. Okay, am I going to say, because I'm a pilot with over 20 years experience of flying, okay, that when the weather is very unfriendly, the weather is turbulent, then I'll take my plane and then face the weather condition headlong? The truth is, at this junction, it's not my experience that counts, okay, because the weather is not friendly, the condition is not friendly. So in spite of my experience, I'm not sure I'm going to successfully land that plane. There is a strong possibility that the plane is going to crash. Okay, so what does that mean? It means there are perfect conditions for trading. So as you begin to develop yourself as a trader over time, you develop the right trading mindset, you get to understand that there are perfect conditions for trading. So understand those perfect conditions, key into those perfect conditions, and it will increase your winning probability. Okay, so in a nutshell, finally, you don't invest what you cannot afford to lose. What do I mean? People actually have a misconception of this quote. It's as simple as this. If I'm investing $10,000 in my trading account, okay, at each point I'm taking a trade, what can I afford to lose that would not unrattle me or cause me to become undisciplined or cause me to lose focus on my trading plan? That is exactly what you should be thinking about when you are taking your trades. In other words, don't invest what you cannot afford to lose per trade, per time, okay? Because once you can afford to lose it, okay, you are focused on the task that is on ground, okay? And then you're looking out for, you have a trading plan that you put, okay, this is my risk to reward ratio. This is my risk to reward ratio. Okay, this is what I can afford to lose. Is it $20 per time? Once I fix that $20, what am I expecting? Is it another $40? Beautiful. Okay, so if I lose that $20, how does it affect my psychology? Does it affect my trading skills? Does it affect my trading psychology? Does it unrattle me as a trader? Does it make me unsettled? If all of this, if the answer to this is yes, then you don't want to risk that amount of money. Okay, but if the answer is no, it doesn't affect me, then go ahead and risk it. Okay, it makes you a comfortable trader, it makes you in charge of the situation, it makes you unrattled, it makes you more successful, and it makes you a disciplined trader. Okay, so at this juncture, I come to the end of my slide, come to the end of my presentation and the end of this webinar. So if you guys are in Lagos, I want to invite you, okay? You can come over to the office so that you can learn more of these strategies, okay? Because we have a lot of guys on ground with lots of experience that can actually guide you guys to making the right trading decision and helping you guys move, from this as a newbie trader through your career path, okay, to becoming a professional trader. Okay, so think success, think IBF. So our office is somewhere around Allen Junction. Okay, that's the office address, somewhere around Allen Junction. Okay, so we'll be expecting you guys. You can quickly take a screenshot of that so that you can join us here and learn so much. We have so much to offer you guys as you continue your journey, your trading journey. Okay, so you can also follow us on our social media handles where you can get a lot of information. Okay, and you can reach out to us. Okay, on our Facebook, LinkedIn, Instagram, and as well as our Twitter accounts. Okay, I hope you guys learned some things. Okay, it was amazing having you guys join us on this webinar, and I'm sure you've learned a great deal today. So we expect your questions, we expect your comments, we expect your responses, and we look forward to seeing you again in our webinar series. Trust me, we have a lot in store for you guys. Thank you very much, guys. Thank you for joining us. Have a great and amazing weekend. Thank you.